Hey, good morning. Let's go over today's trade plan. So yesterday closed with buyers in control, and in the overnight session we saw a continuation move up to the 2061.5 level. At this point, heading into the open, buyers can maintain firm control above 54.5 to 56.5. This is the most aggressive area of support, and holding above it would signal continued bullishness in the market, and from there we could go up and tag the 63 quarter to 65.75 initial resistance zone. Now, the resistance zone above marks larger time frame resistance, and we have a key swing high at 65.75 from end of last year. So as we're approaching that zone, just keep in mind that we are testing now some larger time frame areas of resistance where there could be a bit more of a struggle. And beyond 65.75, we have a important larger time frame high volume node at 69.75, open gap 71.5, and naked VPOC 72.5, and that's an area that has potential to cap the upside today. So if the 65.75 doesn't cap it, then the 69.75 to 72.5 area has potential to cap the upside, followed by 78 to 80.5. So the thing we have to keep in mind is that even though the buyers are in firm control on the smaller time frames here, we have to balance that with the areas of resistance that are overhead. And if we start seeing some quick rejection at those spots, then we just have to be nimble with any long trades taken from aggressive trade location. On the downside, below the 54.5, 56.5, we have initial support, 46.75 to 49 quarter, and ideally you want to see the market holding above 46.75 to 49 quarter. Now, given the level of short-term strength that we've seen in this market, responsive buyers can be active at pretty much every zone on the way down. So first test of initial support, 43.5, 44.5, 39.41 in the event of some additional selling, and finally 33.5 to 35.5 in the event that we actually go down and test those areas. Responsive buyers can be active and defend those zones, and there would be potential for the market to reverse off of those zones, and then ES can start balancing again within a range at higher prices. So as long as we're not seeing clear-cut signs of weakness on the day time frame, so sustained downside momentum or a strong trending down AD line, the buy side can maintain short-term control, and buyers can be active on first test of pretty much every zone. Holding above 54.5, 56.5 just tells us that the market is quite strong, and we can actually rotate off of it and hit 63 quarter, 65.75. But a break of the pre-market support doesn't necessarily mean the market's weak. It just means that we could be testing the zone below, and then the market can balance and perhaps even reverse and then start going back up. So our focus is going to be more on the long side, but that doesn't mean that we can't consider short setups at good location if we're seeing some signs intraday of a lack of momentum, or if it's purely a location-based setup. We are testing now larger time frame resistance, and these areas have potential to hold. So unless we're seeing some major upside strength on the day time frame, there could be potentially a short setup up here too, especially if we get exhausted into a zone, or if we get exhausted into the 69.75 to 72.5 area. So those are the main ideas heading into the open. We're going to be a little bit careful at the highs here because it is very aggressive location with relatively limited reward potential for buyers. But if we get a nice pullback into a zone, or if in real time we're seeing a lot of upside momentum and it's purely a momentum-based setup, then that's something we can consider, but then we have to manage it accordingly and with the larger time frame resistance in mind. So those are the main thoughts. Let's see if the buyers can maintain control, and we'll take it from there.